Today I'm going to tell you how to travel the world tax-free. So there is this idea of being a perpetual traveler. Now, perpetual is maybe a little extreme. Forever is a very long time. But there is something to be said for the idea that many people would like to spend maybe a few years of their life traveling around from place to place. Some people might call it slow travel. Some people, might refer to it as being a digital nomad and simply having no fixed place. And it turns out there may be some possibilities where you could really benefit from that from a tax standpoint. So in other words, this extended vacation may be financed to some extent by the government paying you, or rather you not having to pay the government, you ditching that wonderful business partner known as the state in your glorious traversal of the globe to be able to kind of fund this extra experience, which is pretty cool because, as we all know, travel is one of the things that makes us richer. This being said, I have talked previously about this subject, and you can check out some other videos I have on can you be a perpetual traveler, etc. And so today I'm going to answer kind of the three things that people tend to run into that get them into trouble when trying to do this. Now, it is worth understanding that this does not apply for Americans. I will talk about Americans later on. And there are certain people from other countries, such as places like Australia, where we need to look at it a little bit more closely. And so I will talk a little bit about that as well. Before we do, if you haven't already, please hit the subscribe button, hit the all notification bell. Thank you for being with us. We appreciate you. If this is your first time here, I am Michael from Offshore Citizen. We are some of the foremost experts on international tax optimizations. We help people to understand the global tax consequences. There's lots of people who are specialists in individual local countries, but they don't understand how countries interact with each other. And so we are experts in explaining how that works, helping you to figure out the best strategies, as well as relocation, immigration, getting residency permits, citizenships, etc., all part of building plan Bs, protecting your assets, improving your freedom, making more money, etc. So if any of those topics are interesting to you, I would encourage you to reach out to us. Book a call with me at calendly.com/Michael-Rosmer. There's a link in the description below. In those calls, we tend to go over the specifics of your situation. Here we talk about lots about general topics, but every situation is unique, and so we try to go through what condition you're in, what your objectives are, and what the ideal solution for you is based on that. Otherwise, you can also reach out to us through our website, offshorecitizen.net, where you can send a message, and we'll be happy to help you. But let's dive in. All right, so just quickly talking about what is important here. The first most important thing to understand is that countries tend to tax you on the basis of two main things, okay? The first is your residency, okay? So if you're a resident in some place, then a country will tend to levy tax on you. Now, there are two countries, the US and Eritrea, as well as there are some other countries that kind of quasi do this, that don't get talked about so much, where your residency, your tax residency rather, will be determined always by your citizenship. Meaning, if you're a US citizen, you're gonna be in the US tax net no matter what is going on. Eritrea nobody really cares about, so not really too concerned about that. But there are some other countries where when you depart, they kind of try and hang on to you for a number of years. Places like Norway, to some extent places like Spain, depends a little bit on how long you've been there, etc. This is really important to understand, that if you're a resident, you're subject to the tax rules of that country. The second thing that can be a situation is they can tax you if you're earning income in a particular place. And this is not earning income from, say, customers there. Usually it's earning income from work there, okay? So what does this mean? Well, it means that if you go traveling for an extended period of time, you could potentially no longer be resident in a given country where you're from, and you would no longer be working in that country, and so potentially you would be outside of their tax net. Now, I do say potentially because every country has different rules. This is where the specifics come in. This is where, talking to us and booking a call and going through your situation comes into play. But there are a lot of people in the world from many different countries who can benefit from this. Now, interestingly, even people like Americans can benefit from it because they can claim something called the foreign earned income exclusion, where they can get about $120,000 to $150,000 a year tax-free if they are out of the country more than 330 days. There's kind of complex, and so I've done some videos where we talk about that as well. But for a lot of people, this is kind of a dream, right? Who doesn't want to take a year off or 2 years off and go and see different parts of the world? I have some clients who they want to sail and travel around the world in boat. Some people just want to see some different parts of the globe. Maybe they want to take a visit to Southeast Asia, spend some time in Bali. Maybe they want to eat, pray, love, as the book would say. Check out beautiful sites, cuisine. Lots of different people have that desire. Now, how does this work from a tax standpoint? The key thing is you need to become non-resident in a particular country. First of all, that involves getting out of your own country, and as I said, some countries have a problem with this. For example, Australia, Canada, etc., generally will not allow you to be non-resident unless you're resident in some other place. You typically can't be a resident of nowhere. So people from those countries, unfortunately, are usually screwed. There are some very rare exceptions to that, but usually they're going to be screwed. So you would need to be from one of these other countries, but it turns out most of the countries of the world actually will allow you to be non-resident there. And usually that involves doing two things. One is not being physically present in the country. If you're traveling for, maybe a couple of years or something, voila, that's done, taken care of, awesome, no problems at all. The second thing is you may need to cut ties with that country. Now, cutting ties, it has varying degrees depending on the place, but certainly you would need to get rid of your regular home. Now, this doesn't necessarily mean selling your house or something, but it means that if you own property, it is rented out on a permanent, or rather on a long-term basis. So not like you're not Airbnb-ing it, but you're having somebody who's rented it for 6 months or 12 months, something like that. Or of course you could just dispose of it. And if you were living in a rented place, then you give up your lease and it's not available. Typically you might say you put your things in storage, although in some countries having your things in storage in that country could keep you resident there. So you may have to move those things out. You may have to, that's case by case. But these would be the two things you would do, okay? Assuming you could do both of those things, you're, in a lot of cases, going to be out. You'll typically tell the tax department, hey, I'm leaving, I'm gone, sayonara, see you later. Actually, hopefully don't see you later, and off we go, all right? Perfect, off you go. This comes to the next part, which is, what about getting caught in the next country's tax net? That is the big problem here. So you have two parts of this wonderful journey of being a perpetual traveler, seeing the world and not paying tax. Number one, getting out of the country that you're coming from. Number two, not getting into another country. I guess there are some countries that are tax-free. Again, I've done some videos on that. If you want to check out videos on the tax-free countries in the world, you can go and search our channel and find them. However, in most cases, the plan here is simply not to fall into the tax net of any other country. So this brings us to the three things which you must typically avoid, or the three things that will trip you up and get you into lots of trouble, or potentially get you into lots of trouble, so best to avoid them. Number one, we want to be in a situation where you do not have a residency permit in any of those countries. Generally speaking, if you don't have a residency permit, you're not likely to get looked at. And if you do have a residency permit, there's a reasonable chance you will get looked at, so don't get a residency permit if you're going to be a perpetual traveler. Obviously, if you want to settle somewhere, you're going to get a residency permit. Totally different situation. We help people with that. If you're interested, reach out to us. But if you're in a situation, otherwise, yeah, just forget the residency permit and go to places for long enough that you can have visa-free access, or at least tourist visa access. Okay, number one, great start. Number two, you need to make sure that you do not get a long-term home in those places. Okay, so this is kind of the next thing that will put you on the radar and potentially draw you into the tax net, would be if you're in a situation where you have what they would kind of call a permanent home available to you. Again, permanent, a little bit of an extreme term, but what we really mean is a long-term form of accommodation. So you should not be renting a place on a 6-month or 12-month lease. Bad idea, okay? You also should not buy real estate. Also bad idea. These are things that would tie you in and potentially get you in trouble. Now, again, I say potentially because very case by case. Some countries, very clearly it's not an issue. For example, you could go to Czech Republic and you could have a 12-month lease, and if you're not there very long, then it's not a problem anyway, which brings us to our third requirement. Our third requirement is that you must not spend more than typically 182 days in a country. In most countries, not all, but most, if you're there in the country over 182 days, you will become a resident. You're there more than half a year. There are a couple cases where it's quite a bit lower than that, so you need to check case by case and see what the rules for that particular country are. It can also be affected a little by whether you've spent previous time there. So, for example, in the case of the US, they have something called the substantial presence test, and under the substantial presence test, the calculation that's done is done over 3 years rather than over a single year. So you can't just say, okay, well, I'm under 6 months, 3 years in a row. No, you could actually be over. So you have to watch, again, each country. However, if you do these 3 things, if you, number 1, don't get a residency permit. Number 2, don't get yourself a long-term accommodation. You're just doing kind of temporary accommodation, regular Airbnb or hotels, etc. Number 3, you are not in a situation where you overstay beyond whatever the threshold for that country is. Certainly in most cases, the fairly easy number is 183 days. Actually, the real secret is that in most cases, if you don't overstay a tourist visa, then you're generally not going to be in issues, although, again, a couple exceptions to that. So if you can do that, then generally speaking, you will not fall into the tax nets of those countries. And if you successfully did the other things we kind of discussed, again, case by case to the country, you will be in a situation where you'd be out of that tax system and you can have no place that is taxing you anywhere in the world, which could mean that you end up saving quite a lot of money on your travels, and that could in fact pay for your travels in themselves. So if you want help with that, if you have any specific questions, like I said, please reach out to us, and I'm going to look forward to seeing you guys on the next video.